If you've been wanting to start investing, but the stock market still feels confusing or scary, then this video is for you because most beginners do not start because they think they need a lot of money, or they're scared to make a mistake or lose money, or they just don't know what to buy. But by the end of this video, you'll know exactly what investing is, how the stock market works, i.e. how you make money, how much you should invest, as well as what beginners should invest in, again, trial and error, as well as how to make your very first investment step by step. And this is coming from someone who's made a lot of mistakes, lost a lot of money, but through it all, I've built a portfolio worth over $250,000, and I want that for you too. So today, I'm breaking everything down in the most beginner-friendly way possible so you can start investing with confidence and put that first $100 to work, y'all. And if you stay to the end, you'll get a sneak peek into my favorite investment that has doubled in the last 2 years. So let's get into it. What is investing? Investing is simply putting your money to work so that it can grow over time. Now, this is not scamming. This is not gambling. This is allowing your money to work for you, because ultimately inflation is beating all of us. And inflation is when the cost of goods and services increase year over year, which means that our money is essentially losing value. So with investing, you're putting that money somewhere in the form of a public company. So let's think of this as a slice of pizza. Let's say buying a share of a company is like owning a tiny slice of pizza. And as that company grows, think of like an Apple, a Google, a Facebook, or a Meta, the value of that slice of pizza that you bought grows as well. And that's what we want. We don't want the $1 that we put in to stay $1. We want it to turn into $5 to $10. And that is essentially what investing is. And that's why I love it. It's the price of that pizza increasing in value. And because you own a slice of that pizza, your money's growing and it's increasing in value as well. So next is, how does the stock market work and how do I make money in it, baby? Important question. Okay, so the stock market is just a place where people buy and sell public companies, and you ultimately own these companies in the form of shares. And so shares are essentially small things that you own of a public company. So think of like Google having a bunch of shares. As a shareholder, you are essentially an owner, a partial owner of this company, so that you make money when they make money, essentially. So we know that the prices of their goods and their services, think of like a Netflix or Google, for example, those prices are moving up and down every single day based on price and, supply and demand. Based on how the company is doing. If they've released a new product or they have a new integration with somebody, the company likely is going to be doing well of that. Or if the economy is killing it and they have this new iPhone out, if it's Apple, then we want to be an investor in Apple because we want to make sure that as Apple makes more money on these new phones, we get a piece of that money. And essentially that's what the stock market is, y'all. It's super simple. And there's two ways that you can make money in it. Number one is when the price goes up of the shares that you own, that you eventually sell for a higher price, you'll make money. That's called, it's called capital gains, as well as the second way that you'll make money is through dividends. So essentially what this means is companies like these Apples, these Netflix, will pay you a portion of their profits because you own some of their shares, okay? Now, let's be clear, not all companies are slated for growth. Not all companies are gonna pay you these dividends, but that's something a simple Google will help you figure out, okay? And to be clear, if you're thinking about it, yes, Apple does pay dividends. And usually these dividends are, at the discretion of the company, but they can be paid out annually, they can be paid out quarterly, they can be paid out monthly. That's something that I can walk you through. And if you want to learn more about investing, if you're like, okay, girl, this is good, I want to learn more, like where can I learn more? Like I need some foundational knowledge, then grab my free Investor 101 guide. It's essentially a 20-minute exercise where I walk you through all things investing for beginners. It's that foundational layer that you feel like you should have learned in school, we should have learned in college that we didn't. I'm breaking down different investment types. I'm breaking down different investment accounts because all accounts are not created equal. I know a lot of people want to just focus on like the Robinhoods and the things that we hear about online, but there are so many other amazing accounts like our 401ks, our 403bs, IRAs, Roth IRAs, traditional IRAs that we need to start with, okay? And also, a lot of people feel like they should just buy Google outright. And ultimately, there's a better way for you to buy Google, Apple, Netflix, Microsoft for one purchase price. And I break all of that down in my free Investor 101 guide. Again, that is linked in the description. It's what I wish I had when I was starting my investing journey, and it's going to help you on your journey too. So again, linked in the description. and it is free, okay? Free 99. So the next thing that you want to focus on is figuring out how much you can invest, because you likely have heard that, you need thousands of dollars. You need $10,000, $20,000. And that's where a lot of people are steering you wrong, baby, because that's how I thought as well, But ultimately, what I want you to do is focus on what you have available right now that you do not need. I do not believe in investing money that you need right now. I do not recommend it at all, because investing is a long game. Do not invest any money that you'll need in the next 3 to 5 years. And I'm telling you that as someone who's done that and lost money. We don't do that around here, okay? So start with what you can afford. Even if it's just $100 a month, y'all. $100 can grow consistently, because historically the stock market returns 7 to 10% annually on the money that you invest. So that $100 plus 7% is going to be worth more money in the future versus if you just leave it in your checking account. So we're not doing that, but we're also building an emergency fund first. And an emergency fund is essentially some money set aside for emergencies. So let's say you've gotten laid off. I got laid off. I'm unemployed right now. Okay. Let's say you had a car breakdown. You need a new car. What that emergency fund is going to allow you to do is have a peace of mind and know that you have 1 to 3 months of expenses saved. If you want to go beyond 3, baby, I have 6 months, because again, I'm laid off. I'm going to need this money. Make sure that you have that emergency fund before you start investing, y'all, and have at least, I would say at least 1 month, but if you can go for 3 months, the bigger the better, okay? And I leave my emergency fund in a high yield savings account, which is essentially a savings account that pays you to save. I personally use Markets by Goldman Sachs, but there's Ally, Wealthfront has one, SoFi has one, but if you want the link to mine, if you want to get an extra percentage on your interest, because with a high yield savings account, they actually pay you to save in the form of interest. And usually we pay interest, if we are paying back a car note, if we're paying back student loans, but it's the complete opposite with a high yield savings account. So I have a whole video on that. I'll be sure to link that somewhere on the screen, on how banks are making money off of us, and we need to be making money off of those. So that'll pop up somewhere on the screen. But please make sure you have your high yield savings account. Do not skip it, okay? But once you have that 1 to 3 months saved, for anything that goes wrong, then the next step is to start investing consistently, y'all. And I highly, highly recommend starting with just $100. It doesn't have to be a lot. $100 every single month matters because of compound interest. And compound interest is essentially where the magic happens. It's where your money is growing faster because the interest you earn starts earning interest too. So think of it as like a snowball rolling down the hill, okay? It starts small, it's rolling small, but it picks up more snow and it grows bigger and bigger over time. That's essentially what compound interest is. It's your interest earning interest on its interest, because you're not touching the money, you're letting it grow. And as you are making money from the growth, from the dividends, you don't touch that money. You just leave it in there and allow it to compound over time and collect more interest for you with you doing nothing, okay? You on your vacations, you hanging out with your family, you at happy hour, you having brunch with the girls, and that money is growing for you. So I'm a huge fan of just starting small, $100, staying consistent, and keeping that $100 investing every single month in one thing, which is what we're going to talk about next, is learning the investment types. What are the different ways to invest out there? So I'm going to focus on 3 main types for this video. Number 1 is stock. So this is probably what most people are familiar with. It's you essentially going out to buy one single company and own, shares. You may start with 1 share and it grows up to 5, 10, 20,000 shares. So this is you just outright buying a Google or a Facebook or a Meta or a Netflix. That's the most common way to invest, but it's actually the way that I have lost a lot of money investing, because when that company tanks, I don't know what's going on outside. The ghetto. Okay. So when that company tanks, you tank too, because you put all your chips in this one company. So I actually do not recommend stocks as a beginner. I actually recommend the next one, which is ETFs. This stands for exchange traded funds, and it's essentially you owning a collection of stocks with one purchase price. So think of it as, we're going to Sephora, baby. We're buying foundation, we're buying mascara, we're buying an eyeliner, pencil, we're buying, concealer, and we're getting all of that for one purchase price. These are all from individual companies, but you bought them all for one price. That is essentially what an exchange traded fund and ETF fund is. And what we love about these is that they give you diversification. If one of those things go wrong in that cart, it's not the end of the world, because guess what? You have all these other things that you bought that you can utilize. So that's what it is. It's a diversified basket of stocks. It's a diversified basket of companies that you have partial ownership to. And it's my favorite way to invest, baby. I love ETFs. They are very cost efficient. You can do a lot with $100 consistently month over month. And it's super beginner friendly, because you don't have to sit there and try to figure out, okay, should I buy Google? Should I buy Netflix? No, baby, buy them all, okay? It's called VGT, which is a combination of the top tech companies in the US. That is a real ticker symbol, y'all. It's called VGT. It's an ETF, which we just talked about, and it tracks the top tech companies here in the US, and I'm personally an owner of VGT, okay? Now, the final way that you can invest is index funds. Now, I love index funds as well. With index funds, these are actually similar to ETFs, and in fact, a lot of people kind of use it interchangeably. But the one thing I'll say with index funds is that it tracks a single market. Now, ETFs can do this as well, but an example of an index fund is essentially like VOO. VOO is tracking the top 500 companies in the US. So if you own VOO as an example, you are tracking and you have partial ownership into the top 500 companies, which is great for diversification. That way, if the top 5 go wrong, you have visibility into the other top 495 companies here. And again, these are very similar to ETFs. They just tend to cost a little more money on the front end versus an ETF. You can start with, a fractional ETF. It's not as common to buy a fractional index fund, if that makes sense. And also from a trading perspective, you are not able to trade it as freely, which means you're not able to buy it and sell as frequently. Like, you have to kind of buy it and hold on to it for that day before you decide to sell it later. So I love index funds as well because they allow me to automatically invest. With ETFs, some of them you have to actually manually go in and invest. But with index funds, like, I have a lot of them automated in my Roth IRA. And the great thing about these is that though Vanguard is the most common, advisor out there, brokerage out there, Fidelity actually has better rates, better expenses. They have a lot of zero cost index funds and ETFs, which is why I use Fidelity over Vanguard, but I still own a lot of Vanguard funds as well, as I mentioned. So that's essentially the 3 type of ways that you can invest. But again, for beginners, I recommend ETFs, exchange traded funds, because they allow you to have visibility into multiple companies, on multiple companies with one purchase price, and you can continue to invest in that same ETF year after year, month after month, for a whole year. And then at the end of that, you will have invested $1,200 in one ETF, like VGT, which is, again, it has a collection of all the top tech companies, or it could be VOO, which is the top 500 companies, and it's tracking the S&P 500. You be shocked at how your money grows, y'all. Again, the stock market on average returns between 7 and 10% on your money, which means your money is growing. While you are living your best life, your money is growing. So again, for beginners, I recommend ETFs, and I recommend an index ETF, which is, again, tracking the S&P 500. It's tracking the total market index, which is essentially an even larger list of companies, the top companies here in the US and beyond. So again, ETFs for beginners, $100 to start, doing it every single month. Now let's talk about picking the right accounts, because there are tons of accounts out there. Again, we've already talked about Robinhood. Robinhood had its day, baby, where everybody was on Robinhood, didn't know what they was doing, including me, okay? But you want to make sure that you're investing in the right accounts, y'all. There is a difference with these accounts. There's taxable accounts, which is a brokerage account, which is a Robinhood, which essentially means that if you're making money in this account, you're paying taxes on it. We don't want to pay taxes on our money just yet, baby. We want our money to grow and pay no taxes if possible. And then there are non-tax advantage accounts, non-taxable accounts, which would be the 401ks. If you work a 9-to-5, baby, you've likely heard the term 401k. If you work a 9-to-5 and you work in the public sector as a teacher, government, you've likely heard 403b. Do not sleep on these accounts, y'all. These are company-sponsored retirement accounts, and most of them allow you to get a tax cut by investing in them. Number one, And then number 2, they allow a company match. So let's say you put in 3% of your salary and your company is matching up to 3% of that. So that means they will add in 1.5%, which means that you have an ending balance of 4.5%. And let's give these some real numbers. Let's say you put in $500 and the company's matching, 50% of that. That means that they're going to put in $250. So now your balance is $750 versus the $500 that you put in on your own. So that's why I love 401ks, 403bs. Please get serious about these. This is a great place to start if you work a regular 9 to 5. But if you don't, there's also IRAs. Now, IRAs stand for individual retirement accounts. These come in 2 functions. One, there's a Roth IRA. This is most common for people that make less than $150,000 annually. It's tax-free growth, baby. It's tax-free withdrawals after a certain age, which is 59 and a half. I use a Roth IRA myself. There's also traditional IRAs. Now, these are for the people that make more than $150,000 annually, and they are allowed a tax cut. So whatever they put into that traditional IRA, they can deduct from whatever their taxable amount of income is that year, which is number 1, saving them money, and number 2, helping them save for retirement. So I'm a huge fan of IRAs, but if you are making less than $150,000, baby, start with the Roth IRA. These are available at Vanguard, at Fidelity, at Wealthfront, at Betterment. Please get serious about starting with your IRA, baby, your Roth IRA. And I personally max mine out, which means that I put the maximum amount that I can every single year in it. And for 2025, it was $7,000. So I max it out every single year because, again, it's tax-free growth and it's tax-free withdrawals once I reach 59 and a half. And if I need that money sooner, there's a way to get it as well. It's called the Roth conversion letter, baby. But we're not going to talk about that right now. It's a little too complex. That'll be on a future video. So those are the 3 accounts that are out there. It's the 401ks, the 403bs. These are company-sponsored retirement accounts. Use this because of the company match, y'all. Even if that just means contributing up to whatever they're going to contribute. If they say they match 50% of your 6%, just put in 6%, okay? I know you're going to hate losing the money on the front end, but I'm telling you it's worth it. 2 is the Roth IRA. Now, this is what I recommend everybody start with because whether you work a 9 to 5 or not, as long as you have some taxable income, you can use a Roth IRA or a traditional IRA. If you make more than $150,000, I would start here. Put that $100 in that ETF in that Roth IRA every single month. I just gave y'all the play, baby. And then lastly is the brokerage account. Now, this is the most taxed account. So any kind of growth whenever you buying, whenever you selling, whenever you earn some money in that account, like a Robinhood, for example, you're paying taxes on that. That's why I do not recommend you start with the brokerage account. That comes later after you've maxed out the Roth IRAs, after you contributed up to the max of your 401k. Then you move to the brokerage account. But actually, you don't even do that. You start with the HSA. But again, we're going to do a whole separate video on that. This is beginner friendly, okay? But accounts matter, and the way you invest your money matters. What accounts you put the money in matters more than you think, okay? So as I mentioned, beginner tip, start with the Roth IRA, $100 and 1 ETF, which is tracking an index fund, index like the S&P 500, which is VOO as an example. Now, if you're like, okay, girl, thanks for the play. I'm still scared. Can you help me a little more? Yes, I can. So in a couple of weeks, I will be doing investHER Live, which is a live workshop where we invest your first $100 together, y'all. We're going to be on Zoom. I'm going to screen share how to research different stocks. I'm going to screen share how to open that Roth IRA. I'm going to help you and hold your hand as you do this, and you'll be able to get feedback and ask questions in real time because I know what it feels like to be fearful of what to invest in, be fearful of where to start, what makes a good investment, what makes a good ETF, what ETFs are even out there. And I want to answer all of that on a live workshop because, again, I don't want to just send y'all to some guide or some course. I want to get your questions answered in real time. So by the end of that session, you have invested your first $100 in that Roth IRA, and you will officially be in investHER, emphasis on the HER at the end. So that is linked in the description. Again, it's happening January 31st. So do not play, baby. Sign up for the wait list. Get your ticket. Do not play because I don't know when I'm going to offer this again, but I get so many questions and I just want to help women get started investing. And I know what it feels like to not know what you don't know. So real-time questions, real-time research. By the end of those 90 minutes, you will have your first 100 invested, and you'll have a plan to continue to invest over time so that you see that growth. So that's going to be linked in the description. Again, it's called the InvestHER Live Workshop, where we invest your first $100 together, y'all. So that's linked in the description. So the next thing I want you to do is take action, okay? I gave y'all the play. The play is one ETF for $100 in one account, which is your Roth IRA or a traditional IRA if you make more than $150,000. So choose one account, pick your investment type. I told you what the investment should be. ETFs, y'all. Start with ETFs. Start small, just $100 every single month, and stay consistent with that $100 every single month. And as you make more money, baby, you want to increase that. You don't want to just leave it at 100. When you get pay increases, when you get some extra money, baby, put that money to work and make sure that it's growing so that you can live your best life both now and in the future. So thank you so much for watching. Again, final reminder, you do not need a lot of money. You do not need to make the perfect investment. And starting today is going to help your money grow instead of leaving it stagnant and it losing its value. So thank you so much for watching. Please comment below. Let me know if you have any questions, comments, concerns. Let me know what other investment type of videos you'd like me to make, any kind of topics, because I'm preparing ahead for 2026 and beyond, and I'm going to be showing up much more consistently on YouTube. So please like, comment, share, subscribe. Send this to someone who wants to start investing, who needs the simple 3-step play that I just gave y'all. And let's get this money. Let's become investors. It's 2026. Well, it's almost 2026, and I need more women who look like me to be investing their money, y'all. Let's not be scared. I'm holding your hand with InvestHER Live. I got a free guide. It's called InvestHER 101, so you have no excuses. Let's get to work. All right? I'll see you guys on the next video. Peace.